Sir, they say that for successful investing, three things are required: philosophy, strategy, and portfolio discipline. Sir, if I may talk about portfolio discipline, what is the number of stocks that Samiksha Capital has typically in a portfolio? I had read it in your presentation that while it is concentrated, but it is sufficiently diversified. And also, sir, as a follow-on, if we may try and understand what is the max weight that you generally allow for a certain stock or a sector to have.
Yes, so let's look at this from multiple important angles. We are, first of all, we are a multi-cap fund, so we invest across market cap. Now, one of the things that we observe is that as we go into the small cap bucket, the liquidity can be a challenge, both in terms of buying and selling. And our philosophy is that we do not want to, impact the share price as much as possible because of our buying or selling. So, based on the liquidity in the stock, we would set a rule of maximum position size in that stock. And then we also want to allow only a reasonable time to build a position. I think we are fairly flexible in that. We could allow as much as up to say 6 months to build a position, and within 6 months. And ultimately, we don't want to have very, very small positions in any name. So we do want to run a concentrated portfolio. So when you combine the desire to have a concentrated portfolio, because we believe concentrated portfolio is important to delivering alpha. So the desire to have a concentrated portfolio, and also to not have in unreasonable length of time to build a position, those two things when we combine, it creates an upper limit on in a stock that in terms of position size that we can have. Ultimately, having a too small a position is also not desirable. So that creates a lower limit on the position size that we can have. So both of those factors kind of create the boundary conditions within which we can play. And if it's a liquid name, we could take very large positions. We could go as high as 15%. Though of late we haven't had any instance of doing so because we have found multiple opportunities in the market. So from our experience and based on our size today, what we feel is somewhere around 35 plus or minus few number is a reasonable position, is a reasonable number of stocks that we can own. And it is a larger number compared to some other PMSs because of this rule that we have on the position size and the small cap. We end up having a larger number of small cap names rather than having few very, very small number of small cap names. And we would revisit that number in future if we feel that it becomes necessary. As I mentioned, the largest, we could go as high as 15%, but on the lower end, we would like to have at least say a 2% position. Sometimes we end up having with even a lower position because we start buying a stock and it goes up and it's no longer available at the price that we like to buy. So we may end up with a smaller position as well. We also may try to build a position by sourcing a block if our conviction is very high, and if we can find a block in the market for the stock. The other relevant rule for our portfolio construction is the liquidity in the portfolio. As I mentioned in one of the other questions, that we want to have the flexibility to take a cash call. Now, cash call is only possible if we have some liquid names in the portfolio. So we have created rules around how much of the portfolio we should be able to liquidate within 1 day, how much within say a few days, and how much in a longer period. So when you combine these rules related to the exposure of the portfolio based on the liquidity and the rules around position sizes, it kind of create those boundary conditions, and when you then add the number of stocks in the portfolio, 35 plus or minus few, it kind of guides how our portfolio construction works. And by the way, all these rules, going back to software, the software we have for running our portfolio operations, these rules are hard coded in the software. If we are violating any of these rules, the red warning, red flag message comes out that you are violating this condition. So so that we are aware that of where we are with respect to this risk management rules. I believe that these rules have played an important role in again going back to the point about downside protection. The low downside capture that we have. I think these rules perhaps have helped us because we have limited ourselves to not building very large positions in small cap names.
Wow. So, sir, I believe that Samiksha Capital is doing rule-based risk management for real.
Yes, it is. It is. And I think that runs across everything we do. If we say this is what we do, we actually do it. And if we believe that we can't do it, then we will say we can't.